Now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts, presented by RIA Advisors.
And good morning, welcome to the show. Of course, it is Two Dads on Monday. It's Tuesday, and Jon Penn here this morning. Good morning, John. How are you? Good. Awesome. Yeah, hanging in there. It's Tuesday. We're going to get through this week eventually. Don't forget, this is your PSA, by the way.
Uh-oh.
This weekend, Valentine's Day.
The white tents are already out.
I am
in
just,
all the parking lots.
This is just your family-friendly PSA to all you dads out there. Don't forget this weekend is Valentine's Day. Because it's going to sneak up on you. It's like, yeah, I'm going to do it tomorrow. I'll go take care of it. And it's going to be the 14th before you know it. So. And yes, the tents of desperation are already up.
The tents of desperation.
Across parking lots and inside grocery stores. So, last minute rush to show you really care and have really thought about it. The tents of desperation are there for you to go grab flowers and chocolate covered strawberries. So, yeah.
They just work better under pressure.
Yeah.
I'll see you there in the tent of desperation. No, I'll be there before then.
I'm actually lucky my wife just wants to go to Costco this weekend. So.
Oh, come on. That's it.
It's like,
perfect date.
Just take me to Costco for the weekend. I'm like, okay, deal. So anyway, it's all good. But anyway,
how
just
romantic.
don't. Yeah, exactly. Well, that's my wife. She's not really into Valentine's Day. That's not really her day. Her birthday.
Yeah. Oh.
Is a different story.
Yeah, that's the whole month.
You don't. Yes, that is a whole month for her birthday. Don't mess up her birthday. But Valentine's Day, not so much.
Yeah.
So.
You're a lucky man, Lance Roberts.
Well, I try to celebrate Valentine's every day in a relationship.
Gosh.
So, I'm setting the bar. That's all I'm saying. Anyway. All right, lots of stuff to talk about today. As I've noted, we will have the employment report out tomorrow, which was supposed to be out on Friday. That was delayed because of the shutdown. We're supposed to get it in the morning. And then on Friday, we'll have the inflation data, CPI inflation. So the reporting days for the normal reports are all kind of messed up because of the shutdown. But we should get some data this week to work off of. Earnings continue to roll in. Again, we've got past most of the major earnings this morning. Coca-Cola reported earnings and they missed revenues, so stock may be under a little bit of pressure today. And again, we're just kind of wrapping up earnings season here. And again, as I noted yesterday, we'll have NVIDIA at the end of the month. So that's really the last one of the big major mega cap stocks. Overall, earnings beats are coming in well. We're pushing up towards about an 80% beat rate, not surprising. Overall, earnings have been good. Earnings growth has been very strong. So the market's been kind of responding a bit to that. Interestingly, though, enough, this year so far, we've seen, as we talked about previously, this rotation into value. And when you look at the earnings growth for sectors like energy, staples, and basic materials, those have very, very low rates of earnings growth in the market. So most of the move we've seen in energy stocks this year and staple stocks has really been a multiple expansion rather than a recognition of stronger earnings growth. They're still growing earnings, but just at a very, very slow pace. Their earnings growth rates are very, very low relative to areas of the market like technology, as an example, which have had a very significant discount placed on those stocks because they have such strong earnings growth. So there's been a multiple contraction in technology. And in fact, technology right now is trading at some of the cheapest levels that we've seen really in about the past 5, 6, 7 years. So we've had a very big discount in technology because they've been reporting very strong earnings growth, but those prices have been under pressure, so we've seen a bit of that contraction. Well, and again, this is why, interestingly enough, starting on Friday, we've seen a bit of rotation out of that value trade back into growth, and that kind of continued through yesterday, which kind of brings us to what you need to know before the bell this morning, which is markets actually rallied back up yesterday. We talked about yesterday morning that coming off that sell-off last week, we had these kind of two strong rally days that got us back above the 50 and the 20-day moving average. And yesterday, as we noted yesterday morning, markets were set to open a little bit lower, but immediately after the open, markets rallied back into positive territory. And it was a very healthy day for the market overall because it was just a continual kind of grind higher for most of the day. We finished a little bit off the highs, but not a whole lot so. But we actually got very, very close to touching an all-time high yesterday in the market. So the market continues to remain very much in this bullish trend. And there continues to not really be a lot of, despite kind of all the headline narratives that are going on, et cetera, the market's continuing to do actually just quite well here so far. And again, there's been a lot of internal rotation within the markets. We've seen this. We saw this kind of chase for value stocks earlier in the year. Over the last few days, we've seen some money rotating back towards technology and growth. Those were the big winners over the last couple of days in particular. But interesting enough, I posted a chart this morning on X. The inflows, this is interesting, and it was a bit wild. The inflows into global stocks, right? So all stock markets around the world, X technology, are at the highest level. There's been more than $60 billion invested into markets since the beginning of this year. That's the highest level on record ever. There's just been this massive flood of money coming into markets. And again, they've been going into technology too, but when you strip out technology, those flows into all these other areas of the markets have been just absolutely phenomenal. And this is just kind of that very good indication of a speculative chase in markets. Kind of that, we hear these terms market melt-ups. That's what we've been seeing in a lot of asset classes, like metals, like stocks, like other areas. We've seen this just but $60 billion. This is it's almost a near vertical spike of money flows flowing into these areas of the markets. Here's the interesting point about that. The last time we saw that type of action was in 2021. Now, just don't need to remind you what happened in 2022. Following that. So it doesn't mean that this is all going to kind of come apart right now, but when you see that type of speculative surge in the markets, it's worth at least noticing and just being aware of that kind of speculative activity in the markets. Anyway, but overall, markets are doing fine. We're not overbought yet. Futures are pointing up a little bit this morning. Markets open a little bit flat. We'll see if we get some more follow through today from what we've seen over the past couple of days. But again, as I said, nothing much really overall to kind of be worried about. Interestingly enough, just one thing to wrap up here, Bitcoin, we've talked about that. That's really been kind of the poster child of some of the sell-off this year. Saw a little bit of a bounce here, but it's not really been able to get much traction here. One thing is that Bitcoin is extremely oversold here and starting to try to flatten out here on this momentum basis. So if we can see this actually get a turn into a buy signal, it's not there yet, but there is some decent upside here back towards at least to the 85, 86 area before we start running into kind of any serious resistance and extremely oversold on a relative strength basis. So there's a tradable opportunity that's setting up. It's a little bit early, but again, just kind of something worth watching for. All right, that's what you need to know before the bell this morning. We'll come back after the break as I switch sets, and we'll pick up with Jon Penn for Two Dads on Money and everything you need to know about WD-40 and duct tape. Don't go away.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Say the word annuity and people cringe, but here's the truth. Annuities aren't the enemy of your retirement. Wall Street billionaires don't worry about running out of money. You do. What you're being told about annuities is wrong. Our next Candid Coffee will show you how the right annuities can reduce market risk, create lifetime income, and even replace bonds in today's volatile environment. Join Danny Ratliff and me for Candid Coffee, Saturday, February 21st. Before you dismiss annuities, get the facts and a plan built for your retirement reality. Candid Coffee, Saturday, February 21st. Register today at realinvestmentadvice.com. That's realinvestmentadvice.com.
You're listening to The Real Investment Show.
All right, good morning and welcome to the show. Of course, it's Two Dads on Money. Jon Penn, good morning, sir. How are you?
Good morning. How are you?
Hanging in there. Yeah. It's been an interesting couple, kind of start to the year.
It has. Yeah, it's I can't believe that we're almost halfway through February already.
I know, right?
It's going so fast.
Yeah.
It's really kind of crazy.
I know. Like I told you, I think a couple of weeks ago, I've already started just getting the Christmas trees back out because it'll be here kind of before you know it.
Look, some of my neighbors still have their lights out. They still
Yeah, I really don't understand. You know, you put them all out, just leave them up.
At this
just
point,
turn them off.
if you still have your exterior illumination hanging outside, at this point,
Just leave it.
Just leave it. I mean, just.
I tell you what, I was amazed yesterday. So I had to leave. I had a couple of interviews to do yesterday, and so I left the office about 10 o'clock, and I got to my house at about 10:03 because I live about 3 minutes from the office. But when I was pulling in, there was my neighbor's house across the street. They're getting ready to sell it, and so they're putting a new roof on the house. And the guy, so at like 10:15 in the morning, the crew was just, taking all the shingles off the house. Yeah. Why are you laughing? You know what? I know what comes next. Okay. By 1 o'clock, this house is completely roofed. Yeah. It was amazing how, I was like, this is going to be an all-day thing. They were packing up and leaving like at 1:30, 2 o'clock. And this was not, this is not a small house. It was just amazing how fast that these guys can roof a house. I was just floored.
Yeah, so one of my neighbors on the street had their roof done late January, and I think there were probably 12 folks up on that roof, and they literally hammered that thing out in 6 hours.
It was crazy.
Nuts.
Absolutely crazy. Anyway, that has nothing to do with our topic today. I just was kind of stunned by how fast they can roof a house.
Squirrel.
No, right, it was. Exactly. Exactly. Anyway, by the way, speaking of squirrels.
Yeah.
I have a whole family of raccoons that are living across our street. Raccoons. And they're living in the drain, right? You know when you have those drains on the side of the road, those runoffs?
Yeah, they live there during the day.
Yeah.
Then they come out at night and they're
caught them on camera.
They're looking for dinner.
I know. I caught them on camera.
Yeah.
Because last night, it was about 2 o'clock in the morning, and my Ring doorbell keeps going off because they're walking back and forth across the Ring doorbell. It was a whole family. It was like 5 of them. It was mom and dad and like 3 kids all walking back and forth in front of our cameras last night.
Are you
and they're kind of creepy. They got hands. No, I'm
are
not
you
feeding
supporting
them.
the raccoon
no,
family?
I'm not supporting the raccoon family. I've got 4 raccoons of my own. I don't need more.
That is true. Yeah.
So they live in the sewer?
I hear what you're saying there.
What?
They live in the sewer?
Yeah.
Do they have like a red balloon?
If they have a red balloon, I'm not touching it. So I'm definitely sticking my hand down in the sewer. That's for sure.
No, yeah, not going to do that.
Anyway, all right. Topic.
So this weekend, speaking of raccoons, we had some raccoons at our house too this weekend. Okay. So our oldest daughter and her fiance. They're engaged.
He finally popped the question.
So he, as we were getting towards the end of last year and we were getting towards Thanksgiving and the end of year holidays, Christmas, we had some time where he pulled me aside and he asked me for her hand. Of course, we said yes.
But he was waiting for like the whole perfect setup, right?
So he was wanting to propose. He wanted to get all of our families together. So we're all here in Houston, and his family's all in San Antonio, and he wanted to get us all together for this incredible, magical moment. But just to get all the families together, it would have taken forever. I said. So he called me right before they've been dating for 6 years.
Okay.
Long time, but they've been dating for 6 years, and he called me the weekend. Prior to the weekend of their 6-year anniversary, and said, hey, I'm just going to pop the question. I'm trying to get everybody together. And his name is Ben. I said, Ben, you have our blessing. Just do it. Mm-hmm. I said, just seize the moment. And so now they're engaged. So we're planning a wedding for.
So the good news is after 6 years, she said yes.
So after 6 years, she said yes. Yeah.
If there was any doubt.
Is there any doubt? So she said yes. So now we're planning a wedding for sometime early next year in 2027. I'm just standing out of the way. I'm just getting out of the way. So, but we had some raccoons. So they were all here at our house over the weekend. And of course, we're talking about all sorts of stuff, vehicle maintenance, home repair, apartment repair. And of course, I make the dad joke, well, all you really need is a can of WD-40 and some duct tape. You're fine. They got a kick out of it.
Okay.
They like the dad joke, right? So I thought to myself, there's got to be a way we could tie in WD-40 and duct tape into 2 Dads on Money.
I think it's a great idea, and somebody in our chat just said we can use WD-40 to repel raccoons.
You could.
With a lighter.
With a lighter. That is true. See, I mean, look here. We even had some here at the office, right? I mean, just like it can work with everything. So, but so we were talking about that, but then I started to think about this a little bit.
Chat wants to know if they're invited to the wedding.
Just come on.
We'll stream it.
We'll stream the wedding live.
You know what? The price of admission won't be much.
But it'll just be enough. Just to cover John's wedding costs.
That's right.
Which somebody in chat says is going to be like 125 grand.
So I will be crying at the wedding for more than one reason. It'd be a very happy moment for our daughter, but I'll also be crying because I'm writing the checks.
Right. See, it's interesting. I've already told both my daughters that I'm not paying for anything. So if they want to get married, that's all on them. But I will put money into a savings account for them.
Yeah.
But they have to pay for their own wedding. I'm not paying for a party, right? Yeah. So I told my daughter called yesterday, my oldest daughter, she called yesterday, and she's very upset because her stepsister is getting married like in 2 weeks. And she's now been invited to be the bridesmaid. She goes, "Can I get out of this?" I was like, "No, you can't get out of that." No, you've got to go be a bridesmaid. And she has to buy her own dress, which is, the whole, well, that's part of the deal, right? So she's trying to figure out how to go pay for her dress and go be in this wedding. She goes, "When I get married, there's going to be like 3 people at the wedding and that's it." I'm like, now you're on the right track.
See, and I love Moto Marty in the chat says, WD-40 and duct tape make an excellent wedding gift. That is so true.
It is true. When my daughter left for college, we put her a little toolkit together for college, right? Just a basic set of tools like a pair of pliers, a couple of screwdrivers. Guess what else was in there?
WD-40.
And duct tape.
That's it. See?
It fixes everything.
It does. So it's like there's got to be a way to tie this into the show this morning. Now I guess we're going to have a ton of people at the wedding. You know what? Come on. My wife won't mind. Just come on.
So when my wife and I got married, we did it at City Center here in Houston. They have this kind of green open area. So, and at the time, my office for my other firm was at City Center. And so they have this kind of big open green area, and it's all surrounded by restaurants. And so we had our guests show up, and there was probably about 30 people, just family and friends that were there, kind of sitting on this lawn while we were getting married. But we had like 350 people at the wedding because they were all sitting at the restaurants watching the wedding. So that's the way I do it. Just do a public venue.
So we had ours. We were married in Galveston. So it'll be 29 years ago this year, right? So 29 years ago, we were married at Moody Gardens in Galveston. And they had, at the time, they had a big outdoor garden in the back overlooking the water in Galveston, right? So, but anyway. But because it was at a public venue, our wedding looked a lot bigger than what it really was.
Oh yeah, no, mine too.
Yeah.
Yeah, absolutely.
So we'll see. But yeah, it should be. So anyway, I'm just staying out of the way.
Yeah.
Trying to keep the peace.
If you want to survive, you just stay out of the way.
I'm trying to keep the peace between Mama Raccoon and daughter Raccoon, and trying not to get my eyes clawed out in the process.
Exactly. All right. Well,
this is fun. At least we can just keep talking about this.
Exactly.
Bridezilla.
Oh yeah. So that could be a whole other topic there, Brent. But no. So we're. But all kidding aside, we're very excited about this.
Very excited.
But no. So we were talking a little bit about this, and the topic of WD-40 and duct tape came up, and it does. And I can see how this can tie in, because as things. You can use WD-40 to loosen up anything around your house, right? Or in your vehicle or what have you. But I've noticed many investors are getting very emotional with markets.
Yep.
It's like their emotions are kind of locking up a little bit. There's the tie into the WD-40, right? So their emotions are getting very locked up, and sometimes I almost see too that there can be a lot of overthinking when it comes to investing, or like paralysis by overanalysis. Or we are led to make some knee-jerk reactions that can be very detrimental to our longer-term plans. Mm-hmm. And I know markets right now, I'm hearing a lot of concern that, I think folks, they almost want to make a knee-jerk reaction to position their portfolios to be too conservative too soon. Like maybe there's like a little bit of a bunker mentality out there a little bit.
Yep.
And I mean, there are folks that I visit with now, prospective clients that I visit with now, they kind of got into the bunker back in 2008 during the great financial crisis, and they've been there waiting for the perfect time to invest. But I find that there's some folks that are wanting to get almost too conservative too soon, and my fear is if they do that, they're going to miss, possibly miss some other opportunities along the way.
Yeah.
Right.
Well, no, this has always been a problem, right? I mean, there's two camps in the market, and this is why we talk a lot about narratives.
Yeah.
Because people tend to gravitate towards a narrative, and they're like, oh, because of this, I'm not going to do this. So the market's overvalued, so I'm not going to invest in the stock market because the stock market may crash. The economy's going to blow up, so I'm going to invest in this and not do any of that, or I'm not going to invest at all. Or I'm just going to put my money in savings. And the problem with that is that those narratives tend to get us off the basis of what actually is our goal of investing, which is just get money to work, get that capital to work for us over time. And again, we're looking at long-term timeframes and trying to invest for long-term outcomes, but we're worried about short-term events that may or may not even come to fruition. A lot of these, I just got an email this morning from a gentleman just laying out the whole reason why we're about to have nuclear war, right? And I'm like, that's great. If we have nuclear war, what's it going to matter anyway? It doesn't matter what you own because we're all dead. It doesn't matter what you own at that point. So why worry about something that may or may not even be an issue? I mean, we've been worrying about we've had the doomsday clock since 1945, which has been, like right next to the midnight, we're going to have nuclear devastation just at any moment. Since 1945, we've been worrying about global nuclear war, right? We've had, war games with Matthew Broderick back in the 80s was talking about, geothermonuclear war, right? We're having this whole event. This has been an ongoing narrative for years, and it hasn't occurred yet, and I'm not saying that it won't. But worrying about something today, that you have no control over.
Yeah.
I mean, what are you going to do about it? Right? I mean, it's a threat. I'm not denying it, right? Climate change. People have been talking about climate change since 1950. That climate change was going to end the world, and since 1950, we've been worrying about this. We can worry about that all the time, but for what purpose? There's nothing you can do about it. So the better thing to do is to focus on what you can control. Enjoy your life, right? Just live your life for what it is. Worry about the things you can actually control, and stuff that you can't control or have a narrative over, set it aside. Don't worry about it because there's nothing you can do about it anyway. So just worrying about it just makes you more miserable.
Yeah. And I think, and let me take a step back a little bit. I think, if you want to position being proactive with managing your portfolio from a risk standpoint, in my mind, is a little bit different than making an all or none decision. I think I should have been a little bit more clear earlier, where there are a number of investors out there that are looking to make some big knee-jerk reactions with their portfolio. Well, I'm going to go out of cash right now, or hey, I'm going all in on the gold and silver trade, right? Because I'm going to really. I want something that's safer, more diversified. And as a fiduciary, I take a step back, and I have had to reposition the question some way to folks where I say, hey, if you are coming to me and looking for investment advice as a fiduciary, if I come to you and say, hey, we're going to take 50 or 60 or 70%, I recommend that you take 50 or 60 or 70% of your money and let's go all in on gold or all in on silver on this. Sure. Chances are, I would hope, the potential client might look at me and go, well, you want to put 50, 60, 70% of my eggs in one basket? That doesn't make any sense, right? But then I see a lot of folks out there doing that right now. Like they're really getting caught up in this trade. Sure. So earlier when I was talking, it's okay to be proactive. I don't want to come across by thinking I don't want to come across by saying, hey, this is just buy and hold and do nothing. You need to be proactive with managing risk and take profits along the way and manage your portfolio. But I see folks wanting to make some pretty big all or none decisions. Either get out of the market completely, or they're really chasing the gold and silver trade. And I'm just afraid that if they're really chasing that gold and silver trade, my fear is they're going to get bit.
Well, yeah. Well, of course, they will eventually get
Yeah.
met, right? And this has just been a function of over time. Everything cycles over time, and so you take a look at commodity trades, you take a look at stock trades, you take a look at everything. Everything cycles, and everything goes through cycles over time. So you can get to these very long periods where we get very complacent with taking on risk, but eventually that ends, and the reversions can be very long, extended periods where price does nothing, and the speculative narrative will fade, right? And just you go through a very long period of several years where prices of stocks aren't doing anything. For instance, from 2000 to 2013, stocks went nowhere. You had big ups and downs, but stocks went nowhere. That happens. That happens in every asset class. Gold went for 20 years and went nowhere, right? So just very long periods of just kind of these secular bear markets and asset classes. That happens everywhere. So this is why it's important to have a diversified portfolio. You own a little bit of everything, and then eventually you kind of come out on top. But that's why applying risk management to these type of things is also very important. But it is interesting. It's when AI stocks are doing well, then people call up and they go, I just want to be in AI stocks. So when you own value stocks, like why do we own Procter & Gamble? Why do we own more of NVIDIA, right? That whole trade. Now Procter & Gamble's doing well and NVIDIA's not, and so they're like, why do we own more Procter & Gamble? It's like these things all go through cycles, and we just need to understand how that works.
Agree. Yeah, and I find too that I think there are many investors out there where they're looking at, they have that diversified portfolio, right? And they are managing risk appropriately, but then they are comparing that diversified portfolio to the returns of one investment, where they might look at, well, here's what gold has done so far this year in 2026. Why is my diversified portfolio not giving me what's gold up for the year through yesterday, about 17%? It's like, it's not an apples to apples comparison. And then that starts to just kind of feed in, and it starts to change your investing persona a little bit. And I see where folks will tend to make some knee-jerk reactions that maybe could be detrimental to their longer term, to their success longer term, right? So I think if we can just take a step back and sometimes sleep on those decisions, I think, where you can just take a step back, sleep on it a little bit, you'll wake up refreshed before you really say, hey, do I really want to abandon the investment strategy that has worked so well for me up to this point?
Or
to just go chase returns.
Or just take a long-term chart, take a long-term look at a price chart of any asset.
Yeah.
And you'll see that they go through these periods of booms and busts repeatedly over time. Good question in the chat, which is, when do you believe a prenup should be used for a first marriage? You only need a prenup if you have assets going into the marriage, right? So, and that's very important. So, I mean, if you're getting married, and generally you see prenups more in second marriages because people learn their lesson in the first marriage. But generally, when you get married young, you don't have a lot of assets. So, if you're, I'm sure like John's daughter and her fiance, they probably don't have a lot of assets between them just now. They're just getting started out.
They're just getting started.
Yeah. So really not a reason for a prenup there. Now, the thing about a prenup is also this: you're kind of going into the marriage expecting it to fail, which is not a great. If that's kind of the first kind of red flag. It's like, I'm marrying this person, but I need a prenup, and that, specifically, you don't have any assets, but. If I'm going into a marriage, and generally this is in second, third, fourth marriages, you'll start seeing prenup show up because, an individual has accumulated some assets of both sides, right? And I see this a lot when two people get married. She's very successful or he's very successful, or they're both very successful, and they'll come to the marriage and they're like, okay, great, we're gonna have a prenup. What I'm bringing into the marriage is mine, and what you're bringing into the marriage is yours. What we develop together is ours. And this is particularly the case in Texas, where it's a common law state. Community property state, also common law. So that's where a prenup is most useful. And then, of course, it's very important that once you do the prenup and you put those in place, that you adhere to that prenup, because if you start commingling assets in the marriage, you'll break the prenup, and that prenup won't stay anymore. So you don't start pooling assets together out of the separate accounts. So you keep those separate accounts, very separate accounts, keep all that money very separated, so that in the event of the divorce, when the prenup comes into play, then there's a clear definition of whose assets are whose.
Yeah, because it could be very easy to kind of, what they say, pierce that prenup, where the prenup is
very easy,
where it's no longer valid.
Yeah.
In fact, I just had a conversation yesterday with a client who they were just remarried, And so this is their second marriage, and going into the second marriage, they have a prenup in place, right? So I don't really see prenups used when a younger couple is getting married because they're getting started. They don't have a lot of assets built up at that point. I typically see it if somebody is getting married for another time. If it's a second time, third time, whatever that is, that's usually where I see that put in place too. And it can be very. It's like you're going in. I haven't really come across anybody that wants or expects their marriage to fail.
Yeah.
But it's just but at that point they've accumulated assets, and they're in a way they want to kind of protect themselves a little bit too.
Well, no,
I get it.
Look, I'm not saying there's anything wrong with a prenup.
Yeah, sure.
Because
no, not at all.
again, a marriage is nothing more than a partnership, right? It's just like if you and I are going to form a business and we're going to have a partnership between the two of us, we're going to have a bunch of legal documents that state out what that partnership agreement is.
Have a partnership
and we
agreement.
don't really have a partnership agreement for marriage, right? We have a marriage license that says, hey, you're now married, and there's all these laws that apply to that. But you don't go into a marriage with a defined set of terms that says, this is what I expect from you. This is what you expect from me. And maybe if we did that, we would have much more successful marriages, because a lot of these expectations would be understood up front as to whose roles are what, et cetera. All these concerns. Again, one thing we've talked about here on the show before is that, the two biggest problems with marriages that lead to divorce, and why divorces are over 50% now, is infidelity and finances. And as we've said before, if you're having a lot of trouble with your finances, there's probably going to be infidelity at some point. And so because of the stress, you're unhappy, and it's very easy to fall into that infidelity trap at that point. But again, if you have, this is, when my daughter's in a very serious relationship now, and we're starting to push them towards going to couples counseling to talk about, great, if you're going to get married, then you need to have good set boundaries around whose roles are what, how you're going to handle finances, what your expectations are around finances, those type of things. Have that understanding up front. And so again, maybe if we had better legal, partnerships in business tend to last longer because you have very defined agreements about what happens. Maybe we should consider having marriage agreements that define these things so that people have an understanding going into the marriage about what their jobs are.
Yeah, and so Scott in the chat asks, will a trust protect one's assets? If used correctly, yes, yeah, they can. Trusts are a way to past assets and just bypass probate, but trusts can be used to protect assets as well, especially if maybe there is a divorce, or if for some reason my future son-in-law, who I've viewed as a son since I met him. I mean, he's just a great kid. But if I for some reason, if I did not like him, and now our daughter and he are getting married, and then heaven forbid when it's my time and my wife's time to go off to better places, and our daughters now inherit our estate, I don't want him to have any chance of getting any of those assets whatsoever. Yeah. A trust or trust planning can be very effective with that. But an issue that I see a lot of is there are a lot of folks out there that put a trust in place, but then they fail to title their assets in the name of the trust. Mm-hmm. So you got to make sure you do that. So if you are having a trust put together, folks need to make sure, really work with your estate attorney to say, okay, here's the trust that I formed. Okay, what about my property? What about my belongings? How do I title this so this is all within the scope of the trust? Because if you might have a trust document, but if you don't actually have your assets titled in the name of the trust, it doesn't matter. Right. Right?
Yeah. And again, trusts are very, very good. And I have a trust for my family, right? And this is where I run most of my other business dealings through that trust.
Yeah.
But there's a lot of things you have to worry about with that as well. Like, for instance, you don't put your house inside your trust. So, because if somebody comes over to my house and they trip and fall off the front porch and break the leg and sue me, and the house is in the trust, they can get into the trust because the house is in the trust. So you have to make sure that you also separate your assets between different account structures, right? Have your house in its own structure, have your liquid assets and what we call, things like stocks and bonds and all that type of stuff. That's in a separate, things with a very low risk probability of somebody getting hurt and suing you, put that into its own trust. So again, you need to also have a separation of assets, even in your trust planning, which is very important to consider.
Yeah, or a lot of folks that I work with own rental properties. For
Those should each be an individual
LLC or structure because, there are many folks that I visit with where those rental properties are still just in their personal name.
Yep.
And maybe they have family or close friends that are there as a tenant. But you just never know who might become litigious.
Right. Well, no, there's a fire. And this thing is like when you have rental properties, you put every single rental property in a separate LLC, because if something happens to one property, and if it has all your properties into one, they're all in your personal name, or they're all in one LLC. I've got I have a real estate LLC, and I put all my rental properties there. You have a fire in one that kills somebody, they get access to all of those properties when they sue you. So again, every one of those rental properties should be in a separate LLC.
Yeah, and depending on certain states and laws, and some are a little bit more LLC friendly than others, there are also folks that the property might be in those rental properties might be in their individual name, but they have some pretty hefty umbrella policies to cover just for insurance planning purposes. So all that to say is, I think as investors, I think we're also lured into the market looking at returns of stocks and bonds and risk there. But I think there's even, if we take a step back, not just set aside what market risk is, there's a much bigger area of risk planning that I think many of us kind of fail to spend some time on, and that is, do you have a will? Do you have a trust? What are you doing for liability protection? That's even a much bigger area of risk management that I think a lot of folks out there need to focus on.
Oh, right? Absolutely.
So I'm glad we're touching base on this.
Well, no, it's and this all kind of goes into it. There was a comment about how to divorce, and there's 118,000 legal fees, and all that. Pre-nup's not going to protect you from that. All a pre-nup is going to do is separate out the assets going into the marriage. It's not going to protect you from alimony. It's not going to. And again, we're not an alimony state in Texas, so maybe in California it's different, but it's not going to protect you from things like child support. Things that occurred during the marriage, the prenup doesn't protect you from that. The prenup is prenuptial agreement. That's what that prenup stands for. And that's everything that happened before you got married. Everything that happens post-marriage that you do together is all part of the joint community property. So, if me and my wife got married and I have a lot of money and she has a lot of money, those assets are protected, but we get together and we build a business together and we make a bunch of money in the business. That's not protected by the prenup. That's all part of the marital structure, which will then be divided 50-50 on dissolution.
Yeah.
So.
Yeah, and no, great point there, Blair. Like myself and my teammates here, we're all pretty well versed with trust, estate planning, wills, powers of attorney, LLCs, how all of these various tools work. But I'm not an attorney, so I wouldn't be able to actually sit down and write those documents for you. Right. So
but AI will do that pretty soon. Yeah. So
yeah, no risk with that at all, right? So, but there are times where, in the world of estate planning and putting these documents in place, there are some great online services out there that can work very well. But I think, look, and I try to watch what I spend. I try to watch my pennies and my dollars. But there are some times where it makes sense not to skimp on something or get too cheap with something, and that's an estate plan. Yeah. Like if you have multiple properties out there in different states, and that's where it really makes sense to work with a board certified estate planning attorney. You're going to pay a little bit more for it, but it's going to be done right.
Yeah.
Right.
So we've got a request that we should do a show, maybe next week. We can do a show on revocable versus irrevocable trust and talk. Sure. It's going to be really boring, but yeah, we can do that next week. We'll talk about the different types of trust structures, because I also see people that don't plan well for their trust, and they're like, well, I formed a trust that when I die, the trust will get formed and then it'll all get funded. And there's plenty of legal reasons for doing that. I'm not saying that's not a good idea, But the problem is a lot of things can happen between now and death that can impact your financial assets, lawsuits, litigation, a variety of things, accidents, those type of issues. I mean, life happens.
Yeah.
And so if you've got a lot of money, and like I said, I see this quite a bit, is that people that have built a good amount of wealth, they'll have everything set up legally through their estate plan, which they've all done correctly. I'm not saying that any of this is wrong, right? They're all set up legally for when they pass away, the trust is formed, then the assets flow into the trust, and then the kids participate in the trust, however the trust is going to run and operate. And I have some very specific ideas about when you do a trust. You should not set it up so that your kids get a third of the trust at 25, a third of the trust at 35, and the balance of the trust at 45, because they have no idea how to handle money, right? Set it up so that those assets the principal's never touched, they live off the income. Set that up so that'll last for generations, feed generation after generation. That's how the Rockefellers built, their billions upon wealth. The kids never got access to the corpus. It was always just the income that it generated. So, but back to my point, is if you've had all this wealth, it's great that when you pass away that all those assets will be protected, but what if something happens in between that takes away all your assets because of an accident? You hit somebody and they sue you in your car, and now you're liable for a couple of $1 million in damages. It happens, right? Yeah. Those assets aren't protected. So, this is why I'm a big believer in setting up a trust and funding it, especially if you're generating a lot of assets. Get those into a trust now. Get those out of your personal name. Protect yourself personally against losing a big chunk of your assets for some terrible event that happens in your life.
Yeah, and if you're...
And hopefully it never happens.
And hopefully it never happens. But you want to... Hopefully it never happens, but you just want to have these things in place. Hopefully you never need to use these documents, but they're there in case you do, because it'll make a stressful situation a lot less stressful. But you bring up a really good point. I mean, just and maybe you don't need a trust. I mean, everybody's situation is different. Sometimes umbrella policies can work very well. I mean, just driving on the freeways out here in Houston, it wouldn't take much to cause a multi-car pileup. Mm-hmm. How quickly will your auto insurance policy just be exhausted before, if somebody gets litigious, they're going to try to come after you. Yeah. Right. So you want to get these things in place so that you hope you never need to use them, but they're there. And I think sometimes I can't tell you the number of folks that I visit with where we're again not to be repetitive, but where we're talking about stocks and bonds, and should I own Microsoft or should I really buy Apple here, or hey, NVIDIA is going to be reporting their earnings. Okay, it's all important when we're looking at this from a portfolio and risk management. But again, there are much bigger areas of risk management that I think a lot of people really need to focus on. And when I'm visiting with folks, I ask the fun question. It's a very fun question. I'm like, tell me about the estate planning you've done. Like, what do you have in place? And most of the time I get big eyes that look at me, and husband and wife look at each other. They look at me like they're a raccoon, and they look back at me, and they're like, John, this is something that we've been meaning to do for the last 20 years. I'm like, well, then let's make 2026 the year to get this done. I get it. It's emotional. It's not fun to think about. Look, there are a lot of folks out there that would rather go sit in the dentist chair and get their teeth cleaned than sit down and focus on their estate plan and look at this stuff. But it's important.
It is. It's WD-40.
It's WD-40 and duct tape.
Exactly.
Keeping it all together.
Exactly. And the question is can I get sued if I get on a board of directors? Technically, no. The corporate structure is you're on the board of directors of a corporation, so the corporation is going to be the one that gets sued. However, if the board of directors is committing some type of fraud or criminal activity, and something happens that pierces the corporate veil, then yes, you have personal risk. So just make sure you know what board of directors you're sitting on. But generally, no. The answer is generally no. You don't have, if you're sitting on the board of directors, you don't have a lot of risk. But there is, as they always say, the risk is never zero, right? Yeah. and so you've always got to be careful of that. But there's protections, and this is why we have corporate structures. The corporate structure, like things like a limited partnership or a limited liability corporation, that's why it's called limited liability corporation, or a corporate structure, those are the entities, those are people. right? Which is why I have a huge problem with corporations getting involved in our elections, because they're counted as people. But those are basically entities. They're kind of considered people. They have a tax ID number, the whole 9 yards. In total theory, the lawsuit would always settle with the corporation, and the humans behind that have limited liability. But the risk is never zero, that corporate veil can't be pierced and they get to you personally. So this is why it's always important to protect yourself as well. Have your corporate structure set up, and as we were talking about earlier, make sure that you have various corporate structures for various risk levels. If you, again, don't put automobiles inside of your trust that has all your liquid assets in it, because if somebody gets involved in an accident, pierces right through that trust, because that vehicle is inside that trust, and that's what's going to get sued. So always think about, where is the lawsuit going to come from, and then structure your assets so if I get sued personally, there's nothing here. You can sue me all day long. I got nothing to my name. It's all in my trust or my various trusts. So
yeah, and it's in the trust planning, this liability planning, estate planning, just like a financial plan. This is something that needs to be reviewed and updated. Probably your estate plan doesn't really need to be updated every year, but typically I see folks, especially if you have younger children, as your children become older, now they're young adults, like our girls are going to be 24 and 26 this year. They're no longer minors. So especially when you're younger, young parents, you really want to make sure estate plans are in place in case there's a need for guardianship. But I think sometimes, Lance, folks think about, well, they got to get their estate plan perfect right out of the gate.
right.
And
it's not going to happen.
And it's not going to happen, because your assets are going to grow and your life's going to change. So it's like, just get something in place to at least get some of these basic protections in place. But then you'll have to go back and revisit it, probably about every 5, 7, anywhere between 5 to 7 to 10 years to update this along the way, right? It's just how it works.
No, it is. And again, things change, things happen. Like for instance, my kids are not trustees on my trust. I have third-party trustees. Why? Because I've seen so many trusts that blow up entire families, because they appoint one of the kids to be the trustee, right? And then when it comes time to execute the trust estate, everybody starts fighting over whose is what and who gets what and where, and the whole family just completely blows up. And I've seen this more than once. It's a terrible tragedy. So, I highly encourage people to use a third-party trustee that's not part of the family, so that the lawyer or whoever it is that is your trustee for that can then execute the terms of your trust, your wills, etc., and keep the whole family intact, because everybody just gets their pro rata share, however you designed it. But again, it's just there's things to consider as you're kind of going this, because it sounds great at some point. It's like, oh, I have this one really trustworthy kid, he's awesome, maybe. But then you blow up the entire family between the rest of the siblings, because there's infighting over who's getting what assets, etc. And it happens. It happens all the time. So just be cautious about how you set things up.
Yeah, and what I would say to that is, start having those conversations with your family, with your sons, daughters, your children, sooner than later. Like I would say is, this sounds terrible, but don't pass away and then have them find out about all this after the fact.
Yeah.
Right.
No.
You don't need to have these conversations when they're, when they're, in junior high or what have you. I mean, it depends on their maturity level. But as your kids get older and they become, younger adults, and you find, especially if they're responsible, start having these conversations about your wishes sooner rather than later. I find that the more open that families are around communication around this, the smoother that estate handoff or that wealth transfer is. I find that when I'm just going to say moms and dads, when you're really guarded about this and I'm not letting people in, it can create a lot of problems. I'm seeing it right now with the family, and I'm talking about kids that are, in their 60s, and the family's falling apart over something that could have been just prevented. So what I would just say is, start having these conversations maybe a little bit sooner. Just it will help. It doesn't make it any easier sometimes, but it does make things it does tend to make things a little bit easier.
Yeah, no, I agree. But look, we'll get into a lot
Yeah.
more of this. So we'll do this next week. We'll talk about revocable, irrevocable trust, living trust, living wills, all those type of things next week. We'll kind of get that kind of talk, and we'll talk a little bit more about the do's and the don'ts. And again, this isn't coming from just our opinion. This is just, I have worked with thousands of clients over the last 35 years. And I can tell you, I've seen more families than I can count completely destroyed after a death because of the fighting that occurs over money. Yeah. So having really, really well-defined structures, and again, I've already had these, and to John's point, I've already had these conversations with my kids. They already know that when my wife and I pass away, they don't get any money. They will get a percentage of the income every year divided equally between the four of them for the rest of their lives. And then it will go to their kids, and it'll go to their kids, my great-great-grandkids, so forth and so on. But they will never actually get access to the principal, because the whole purpose of that is to feed generations to come. And this is why when you look at the values of estates, most estates don't last past the first or second generation because they get squandered.
Yeah, I mean, in my opinion, I still want our girls, whatever we pass on to them, you don't want it to be so much where I want them to be still out there contributing to society, right? Mm-hmm. I just don't want them sitting around, just have a windfall arrive in their lap. So I see where you're coming from on how you think, how you have things structured for your kids as well.
Yeah.
I get it.
Yeah, and we'll talk about that more next week. And we'll talk about how to select your trustee too. Don't remind me about that, because
absolutely.
You'll need to select 3 trustees. When you set up your estate plan, most of them, they'll say, give us 3 trustees, because if something happens to the first one, then the second one, and that at some point you want a trustee that is going to outlive everybody, right? And so that's where you're going to start talking about trust companies, those big banks, those type of things that are going to be the eventual trustee after your first 2 trustees expire. So,
all right, sounds good.
All right. We'll talk about that next week. All right, thanks for joining us today. And of course, we'll be back tomorrow with Danny Ratliff for live Q&A, as we always do on Wednesdays. So look forward to seeing you tomorrow. Be sure to go by the website, realinvestmentadvice.com. Get our latest articles. Those are out as well. And of course, if you have any questions or comments, send us an email. We're always happy to help you. If you've got a specific situation with your own estate plan, we can connect you with our estate attorneys that we work with, or we can help you answer your questions. So just feel free. Reach out. I can get the email over to John. Just hit our website, realinvestmentadvice.com, click on the Ask a Question button, and happy to help you. Anyway, have a great day. We'll see you back here on the next edition of The Real Investment Show.